What's going on, everybody? It's Jeff. Welcome back to the channel. Happy Sunday. In this video, we're going to be talking about AMC stock. I've had a lot of people reach out to me via comments and on our private Discord and messages saying, Jeff, can you please cover AMC stock? I haven't done it in a few days, so that is what we're going to do in this video. More importantly, I want to talk about some news that has been portrayed over the internet over the past couple days. I'm going to go over exactly what those metrics are and the meaning behind those metrics, because it is important for you guys to really understand what that means, okay? And if you don't know what I'm talking about, it is the 99.2% number. We're going to dive deeper into that, okay, and really uncover exactly what that means. So stick around. You're not going to want to miss this, guys. First off, I want to mention that in this video, by no means am I trying to influence you to invest in AMC stock. In no means am I trying to say that, guys, this stock is going to explode. I feel like I've been really transparent on my channel. I talk about stocks that I do not have a position in because people ask my opinion and ask me to cover them. However, there are stocks that I also am very bullish on, and I express that. One of them being CCIV, PLTR. Okay, there's a few other ones. You can go back and watch my videos, and I express when I am bullish on a stock. AMC was one that I did take a position on. I am currently down on my position. I have not dollar cost average, and I have not sold out. Everybody is in different financial situations, and by no means do I want to say, guys, hang on, it's gonna go back, because you might be missing out on another opportunity, okay? Personally, I am not selling because I do not need the funds to be able to invest in other opportunities, and I'm not looking to take the tax credit of a loss because we're only in February, it's not near the end of the year. So that is why I am choosing to hold on, okay? But please, guys, do your own due diligence, and by no means am I really trying to influence this stock, and I apologize if any of you ever took that I have, okay? All right, let's get into the video. First off, guys, I've seen a bunch of people pumping out 99.2% of shares are held by investors, whether it's institution or retail. Guys, let me just talk about where that number means, okay? The 99.2%, okay, is AMC Entertainment's float shares compared to their outstanding shares. Let's look about what that means, okay? The float is the number of shares actually available for trading. Shares outstanding are all the shares of a corporation or financial asset that have been authorized, issued, or purchased by investors and are held by them. Float shares / outstanding shares measure the percentage of outstanding shares that are available for trading, which means that 99.2% of shares are available for you as a retail investor to either buy, sell, and so forth, okay? The only percentage of shares that are not available to you are what's called restricted shares. Now, restricted shares could be available for employees, all right, and so forth. A lot of companies, offer you to buy shares at a company at a much lower cost if you are an employee, similar to 401k benefits and so forth. That's just one of the options. That's a restricted share, which means that is not available to you. That's where that number 99.2% means, okay? So if anybody else has talked about it and misconstrued of what that actually means, of 99.2% of all shares are being actually held by investors, excuse me, that's just not possible, guys, and that's not what that number means, okay? So let's get into a little bit about the AMC news, guys, and I'm just going to cover both sides of the spectrum so you guys can understand and be able to begin to formulate a little bit better of a plan, okay? And I am going to talk about the February 25th earnings that are expected to come out. We'll get into that in a little bit, but during the latest earnings report, AMC noted that domestic attendance was off a grueling 97% compared to the same period a year ago. Excuse me, guys. We know that obviously because of COVID. In light of this, it should be no surprise that the financials for the company have been downright awful. In the third quarter, revenues came to $119 million, down from $1.3 billion, guys. That's huge. Net loss of $905 million. However, AMC has taken swift actions to cut back on costs. Part of this has been to take capital expenditures to minimum maintenance levels. Then there has been the cutting back on non-essential expenses and renegotiating of leases, which is awesome. According to the CFO, it's worth noting that we are using these unprecedented times as an opportunity to intensely examine every single category of our spending, which is awesome for long term, okay? The liquidity for this year is based on a major pickup in attendance at AMC's theaters. And actually, this seems like a good bet. With the rollout of vaccines from Pfizer and Moderna got off to a rocky start, the situation has since become much more effective. In the meantime, there's been major improvements of COVID-19 infections, hospitalizations, and death rates. That's awesome, guys. I'm going to give you my own personal perspective on this as well. Okay, I started working at a restaurant when I was 19 years old. It's a local family restaurant in Connecticut. I still work there a night or two a week. It's social interaction, guys, because I spend a lot of time behind my computer, as well as being a family restaurant. And let me tell you, Connecticut is a very restricted state. It's not like Florida where, you don't have to wear masks and so forth. It's restricted, 50% capacity and so forth. I have seen over the past few weeks a huge uptick in individuals wanting to get out, okay? They've saved their money over the past many years. Yes, we do have individuals that have been laid off and have not been compensated, and there are individuals that are struggling, but there's the other side of individuals that are just waiting to get out, but they're still nervous, okay? By means of this, I do see a lot of uptick in the theaters coming forward, okay, throughout the end of 2021. That does not mean in any way that this stock price is going to go up. We're going to dive into that a little bit further, okay? Right here, despite all of this, there still remains some nagging issues. Considering a recent analysis from MKM Partners, he is cutting his rating from neutral to sell back to the dollar. Why? Because there is still about $480 million in deferred rents. Okay, as much as they paid off Silver Lake, they are still in debt. They're still paying, I believe it's about $220 to $250 million in interest alone. That's an interest alone, not principal including at all. Okay, so that's going to be huge. All right, that's something that we definitely have to look forward on. Is even though there's an uptick, there's still negative catalyst which might cause the stock price not to go up. All right, now let's talk about earnings. All right. Right here, as you can see, obviously it's negative because of their business model. And as of Q2 in 2020 and Q3 in 2020, they reported at much worse, which is not good. I do see this number right here being a little bit on the high side because a lot of states haven't opened up. And there was a time where I did believe that they would miss their earnings report and it would be at a greater loss. However, I was reading this article put out by Zacks, and this says they're expected to beat earnings estimates. Now, it's important to know exactly what that means. The consensus EPS estimate for the quarter has been revised 38% higher over the last 30 days to the current level. This is essentially a reflection of how the covering analysts have collectively reassessed their initial estimates over this period. Let's dive into that a little bit further. This is the most accurate estimate that Zacks has, and it's resulting in an earnings ESP of 14.69%. On the other hand, the stock currently carries a rating rank of number 2, and 2 is a buy, and that's all based on their earnings estimate, okay? So that is some good news. That's going to be coming out the 25th. We also are going to have another short interest report. However, I do see this, which is going to be more accurate based on their spike. However, I do believe this to be continuing to decrease. Now, lastly, guys, I want to get into the charts. I've said this a while ago that I feel that 550 was a support. If you are looking at this chart right now on the 30-day chart, okay, let me scroll up a little bit because I believe that my picture, you are seeing that this is a dead straight line from the 9th. 550, strong support. Okay, so if you are currently holding, I do not see this stock going down any further. I do see it to go up. However, you need to understand what is going to be best for your individual financial investing needs. If that means to sell the stock at a 50% loss, which I know some of you guys are at, and get in someone to be able to double your money, and then it's an even wash, whether you're going to dollar cost average, whatever you plan on doing. I currently have not dollar cost average. There was an individual that left a great comment on one of the videos talking about dollar cost averaging and how he got himself out of a huge $30K debt. And that's something I probably could have invested a little bit more time, research, energy into doing. However, I chose not to do it. Okay, for various different reasons, okay, that I have. That's just my personal, standpoint in my investment strategy. I do want to point out, guys, that volume is very, very low right now. Very, very, very low. You have seen, let's go back to the 5-day chart. You have seen some spikes come up. This was news based on the Forbes article that came out in France, which was, I believe what they said was really an article that came out in May. However, it was just translated in French and reposted as of a couple days ago, all right? But when they're talking about the Amazon buyout, the Netflix, the Disney, I know Amazon was the most popular. There's been really no research or no recent news hinting that it might be a possibility. Do I think it might be a good move for Amazon? Well, they have, when it comes to that kind of business looking to take over the world, and they're getting into their Prime subscription is the most profitable business they have. They're getting more into creating movies. That just builds another vertical. All right, business verticals. If you don't know what business verticals are, please look them up. It makes absolute sense to be able to write the movie, produce the movie, edit the movie, shoot the movie, host the movie, digitally host the movie in the theaters. That's all business verticals. So, but I'm not including that in any any of what I plan on investing, because I don't, that's really, really far out with the potential to happen. All right. However, like I said, my long-term consensus for AMC is that the stock is going to continue to rise, especially in the short term, as vaccines come out, news comes out, stimulus comes out. That's going to help a lot of these brick and mortar. It's going to help a lot of retail. All right, retail's been beaten down really, really hard. However, the business still needs to run like a business in order for this to be the stock to continue to go up. They need to start paying off the debt. They need to have positive earnings. They need to be able to pull in some profit. There needs to be long-term plans of exactly what they're going to do, because naturally, it's as much as people want to go to the movies, you go and spend a freaking $100 for a family of 4 on a movie, okay, where you can't, pick your seats, and they're not even that comfy, and the popcorn might be bad, versus, now you can stream anything on your 75-inch TV that you bought at Costco for, $700. You got a, massaging couch recliner right in your living room, cost you, you know what I mean? And you already paid for it. You microwave the popcorn. It's kind of which one's gonna win over the time. In the short term, yes, people are gonna want to get out. So, guys, that's it for this video. Please, do your own due diligence. Think about what is gonna be best for you to invest in the long term, the short term, what your plans are. Everybody's gonna be different. But like I said, the good news is that we have is, one, stimulus is going to be rolling out. Okay, vaccines are going to be rolling out. Retail is going to start to come back, and naturally, all right, they've been beaten down. All right, and investors are going to start to shift some money over into that, because naturally people are going to be getting out more, especially with summer coming around in the corner. But there's still a lot of speculation based on this company, guys. So, guys, that's it for this video. Let me know what you've done, because like I said, the individual left a comment in my last video letting me know how he basically took his position from a $30,000 loss to almost break even. Was actually awesome input, and thank you. If you are watching this video, thank you for doing that, because it gives everybody else a viewer, all the other viewers, a chance to really give it or see another perspective of how to basically come out of a loss. So that's it for this video, guys. I'll see you in the next one.